surprise, surprise, immigration isn't the cause of the housing bubble because it turns out immigrant households are struggling even more than Canadian households. And this is something that I've been pounding the sand on, beating the table on for so long. So let's get into it and see what's going on. Canada's recent immigrants aren't paid enough to support high home prices. Now, what I really like about this article is it goes into in-depth breaking it down. Immigrants that arrived in Canada from 2016 to 2019 earned significant less than the non-immigrants. Those immigrants had a median income of $35,600 a year, about 20%, $7,200 less than their non-immigrant peers. If you assume a dual medium income household, finding shelter within that budget isn't an easy task. And you've got to remember, where are a lot of those immigrants going? They're also going to places like the GTA. You know, Toronto is insanely expensive. So a lot of those people are earning that income and they're living in a place like Toronto. They're living in these major cities that are very unaffordable. There's barely any that are affordable. So, you know, that raises a question of concern as well. But it gets even more interesting than that when you crunch the numbers, which they've done in this article on what's actually happening. So Canada's recent immigrants can't afford to rent in most cities. Rental housing within the budget isn't an easy task at those income levels. Maxing out their budget to the shelter poverty limit of 30%, they can afford a maximum of $1,780 a month. That's about 17% lower than the $2,140 a month a dual income non-immigrant household could spend before hitting the shelter poverty definition. And we've already seen from the Rent Panda reports that, you know, so many cities, like literally there was Edmonton, Saskatoon, I believe, were the only cities in Canada when you looked even at non-immigrant households, people who weren't in shelter poverty. And we're talking about households. We're not even talking about single people. We're talking about households being above that 30% threshold. So it is just crazy. But, you know, these numbers have just got out of control in this bubble. So Canadians could afford to buy a home in just a handful of cities. Well, we know that. Buying a home is going to be a challenge at this income level. If we assume they max out their leverage and use a high ratio mortgage, the max purchase price is around $300,000. It's about 18%, $65,000 lower than a non-immigrant household could afford. A budget that size won't go far across Canada. According to the CREA, a typical home across Canada was $709,000 in March. So you really have to think about that and just think that through logically right now. So if the median across the country is $709,000 and that is way above what the average income is, how does that work? And the reality is, how it works is because the speculation has allowed people to buy home after home after home. Those who've got assets to just stack the dominoes behind each other, and the banks have just allowed people to do it. They've looked away when people come to them with an application which has got fraud written all over it because they just want to accept it. They just want to lend, just carry on lending because real estate has been this cash cow. It's been insanely profitable for the Canadian banks, and they think nothing can go wrong, even though even they were bailed out in 2008, even though it was kind of a shadow bailout that happened through the IMPP. So, you know, there is insane risk that's in the Canadian financial system, not just because of the household leverage, but the corporate leverage also. So it is a big problem. And then you've also got to think about fraud and money laundering, and something that's actually been raised in the Wall Street Journal. So if you haven't heard, TD pulled out of the First Horizon deal. You know, it's over regulatory reasons. Apparently, the regulators weren't going to let the deal go through. And the concerns came because of TD anti-money laundering practices. Basically, you know, the regulators were saying that TD doesn't handle money laundering, and there was a lot of suspicious transactions going on essentially. And when you really think about it, what do you think when it really comes to a Canadian bank? I mean, there is an insane amount of money laundering going on. And it's interesting that this article came out in the Wall Street Journal because, this wasn't really reported, at least from what I saw, across the main financial press in Canada. So I thought it was really, really interesting to take a look at that and see that that is going on. And, there's consequences for TD as well for walking away from that deal and the deal not going through. And then, we go back to this chart, which is, if this was just the amount of wealth people were bringing over, then number one, you would expect a stronger currency if there was that much demand, if people were bringing that much money in, and it was having a big impact on the real estate market, which is a large market here in Canada. That would affect the FX market to a large degree because they would have to convert that money in order to buy the Canadian assets. But we know that's not the case because we can look at this chart and it pretty much, if you plot out from when this bubble really started to go parabolic in 2003, as you know on this channel, I've done this with Toronto home prices, if you see how much this has gone up from 2003 to now, and then you look how much Toronto home prices have gone up, guess what? It's pretty much the same amount. And that's no coincidence, guys. It's because this whole thing is built on debt. That's what makes me laugh. Realtors, people in the industry, they act like this is a real industry. They act like this isn't built on any kind of a bubble, like it isn't built on debt, like people actually have this money. And that's the only thing that kind of drives me nuts is the kind of blind acceptance that this is, oh yeah, Toronto is just such a great place to live. What? I mean, have you looked at Vancouver? If you haven't been to Vancouver, it is like zombie land. It is just a crazy city, and you've got condos going for like $700,000-800,000, just a bog standard condo in Vancouver. Like, how does that make any sort of sense unless it's speculation? Speculation has just been allowed to run wild because the banks have allowed it to happen. And that's really what it comes down to. The banks have allowed it to happen. And like we went over yesterday, when you look at the household credit market debt to disposable income, it doesn't lie. It's peaking out. And in the Mania, if we stretch this out to the 3-year, you can see how for the first time pretty much this went above that 180% mark, and now it's correcting back down. So it seems like we really hit the top. The Mania just pushed it over. We're getting that double top with a higher high. And, these patterns, it's just funny because you see them repeat with debt. They happen with stocks. They happen with home prices. And it's psychological. It's also based on fundamentals. It seems like we have hit that affordability ceiling, which you eventually get to. And I think it's pretty obvious at this point that we're at that affordability ceiling because, people can't even service the interest payments on their debt right now. I mean, that is just how crazy it's got. Delinquencies are rising, people are defaulting on credit card payments. The banks are starting to get worried about that. And you've got everything else that's going on. And then you've got the auto loans, you've got the short-term rentals, you've got the private lending disaster, because when you have a bubble as big as Canada's housing bubble, what happens with private lending? What happens with fraud? All these things go crazy. People start accepting that, oh, we can just commit fraud. It's absolutely fine because real estate prices, they're just going to go up forever because it's money laundering. But as I just showed you, yes, there's money laundering going on. Is it significant enough to move the needle on the entire housing market across Canada? I don't think so. I think we'd have a lot stronger currency if that was the case. So, there's a lot of nuance there. And the reality is it's just blind speculation, and you can see it in the mortgage debt because the housing prices and the mortgage debt, the correlation between the two It just does not lie, guys. It just does not lie. And that is the correlation that we're looking at. And, you can't argue with this chart. This chart from Better Dwelling, great chart. And I've used it so many times because it tells so many stories. So anyway, I want to thank you so much for watching this video. If you've enjoyed this video, you might like that one there. You might also like that one there. I want to thank you again for watching this, another pre-recorded live stream, because I've had to watch this back, check it's all okay. Thank you so much, coming from England today.